Hello, in this presentation we will process payroll within QuickBooks Pro 2018. If you've been following along with us, that's great. We will be continuing on the Get Great Guitars problem. If not, that's okay. We will be processing payroll down here and you can follow along with the payroll processing process. If you have the backup file for this point, you could go to the file and restore that information. We will be working with entering data, so it would be good to be starting at the same point in time, and hopefully when we're finished with the problem, ending at the same point in time. We've got the company file open, we have the home tab open, home tab being found at the company and then home tab. We also have the open items window open, and if you don't have that, then go to view and open window list. That'll give you this list on the left hand side. We are going to be working, of course, with the employees section of the home tab. We have a nice diagram showing the process of the employee system. That first starting with the enter time. This enter time field being an optional field. That is if we're going to track time, basically have a time ticker clock where we're going to punch in and punch out the time. That can be useful because it could also track that time to the invoices and be recorded within the invoice. We're not going to be using that at this point. We're going to be processing the payroll directly, and we're going to be processing payroll which you would be using if you were to be tracking the time outside and just recording the hours as we are doing here, or within some other type of payroll system that basically tracks the time. If you're billing based on time, then you would be recording those hours at this point, as we will show here, when processing the payroll. And or for processing payroll for those who are salary paid, then we may not be using the enter time function over here in order to help us with the payroll processing. Remember that in order to process payroll, we need some kind of payroll thing set up, some type of payroll system set up. QuickBooks has at least 3 to 4 of them, different tiers of payroll that can be paid, and QuickBooks will provide more of the service. Obviously, the more money is paid for the service. The minimal is to basically process payroll and process the withholdings, which is a big part. And if you go a step up, it can help you with other multiple states, and it can help with the processing of the quarterly forms, the 940s, the 941s, and the yearly forms, which are the 940s, and the W2s and the W3s. We're going to be processing the payroll using the manual system, which looks pretty much the same as a lot of the other tiers, except that we're going to have to actually calculate the withholdings, or input the withholdings in terms of federal income tax and Social Security, Medicare, both on the employee side and the employer side for Social Security and Medicare. This is actually really useful in order to understand payroll and how the payroll system works. And so it's a good practice to do even if we plan on paying for those items, so that we can explain or have an understanding of what is being withheld, how it's being withheld, what the net check calculation looks like, how then is the journal entry being made, or how are accounts affected when the payroll is processed. So let's do that. First thing, we're going to go to the pay employees. Again, you would not have this set up unless you set up the manual system or some other system. If you just want to work through a problem, you could set up the manual system. It's free, in order to see how payroll works and practice with that, and then decide if you want to set up another system. If you have some other payroll system set up, then this icon will still be there. And if you choose, if this looks complicated or something, obviously you then have the option to, when processing payroll, to think about if you want to outsource payroll to something like ADP or Paychecks or some third party, rather than doing it within the QuickBooks system, rather than generating the checks within the QuickBooks system. Okay, so let's see what we have here. We're going to say pay employees. We have set up the employees in the past. We've set up the payroll system in the past. If you missed those, then go back and take a look at those. We are going to have our 2 employees are going to be Adam and Erica. First thing we want to do is set up our pay period ends and our check date. Now these may be different, but we want to make sure that we have both of these in place, or our payroll will not be correct. We'll have problems. So your pay period is going to end whenever the end of the pay period is, depending on if you pay monthly, if you pay bi-weekly, whenever, if you pay every 2 weeks, or semi-annually, which is the middle of each month, or monthly or weekly. And so make sure that you have the end of the time period. We're going to say we were paying monthly, and so we're going to say that this is the end of the month, 01/31/21. We are making our information all as of the date of 2021, or in the year of 2021. The check date we're going to say is the same. And note that doesn't necessarily have to be the case. We might have a system in which the pay period ends and then we process the payroll checks a little bit after that point in time. We're going to be taking it out of the checking account. It could quite be possible that if we have a system set up that we want to put money into a payroll account and then take it directly out, that's a fairly good internal control. If you don't have that, then we're going to take it directly out of the checking account. That's what we're going to be generating our paychecks from. We're going to print paychecks on checks stock. I'm going to say no, we're not going to print paychecks on check stock. If we were to do that, then once we process payroll, we would have our pre-printed checks. We would go ahead and put those pre-printed checks within the computer, and then once we process it, it would print those checks out that we could then distribute. We're going to say no, we're going to say we're going to handwrite the checks and then just process the payroll in order to get this into our system, and that's how we're going to demonstrate this. If that is the case, then we have to assign a check number. That check number is automated here. It's being picked up from the next check number in the system. We should be able to compare that to the checks that we will be writing. It should be the same check number. We're then going to check off the employees that we're going to be dealing with and writing checks for at this time, and then we're going to continue with the payroll process. Here are our 2 employees, and they're giving us a quick overview with the gross pay, the taxes, and the net pay. We can see that this is not correct because 1, we don't have any information for Erica, and 2, there's no withholdings. And that's the case for a couple different reasons. 1, Erica information is an hourly employee, so we have to put their hours in there. And also, we're using the manual payroll system, which means we're actually going to have to go in there and enter the data manually for the withholdings and taxes, which will give us a good idea of what that actually is, rather than just blindly processing the payroll checks and not really understanding what withholdings are or what accounts are being affected. So this will be a good process to see what is happening here. We're going to click on first Adam and see what is there, and then process what we need to in order to make this function. So Adam is a salaried employee, so we have the rate here. There's no hours. We don't need the hours because we're an hourly employee. That means we took the yearly rate and divided it by 12 in essence. This is the gross pay. So if we took the 5483.33 times 12, we get the 54, about 55,000 being the annual. So that same information then is down here on the salary. This is where we're going to calculate our withholdings. So the withholdings we're going to have to input manually. These are what's going to be taken out that we're going to take from the employee in order to then pay it for the employee to the government for them. So we're going to take out $720 for federal income tax, FIT. Why? That would have been received from the information from the withholdings and the exemptions on the W-4, and we'd have to actually look that up and see what should be withheld based on those exemptions. And that's probably the most complicated piece. We'd have to look at the tables and see what to withhold based on being a monthly employee, based on how many exemptions have been taken in accordance with the W-4, and then figure out that withholding based on tables. Also marital status being in the table as well, needing for us to look that up. So we have that, and then we have Social Security and Medicare that we need to withhold. So this is coming out of the paycheck, $258 for Social Security, and the Social Security is usually about 4583.33 times 0.062, and so it's going to be 6.2%. So that could vary from time to time. They might change the Social Security rate, but it's usually going to be more of a flat rate, so it's a fairly easy rate to calculate. And then we're going to have the Medicare, which is 66 we're going to be reducing from. And that, again, is usually fairly constant. So I believe it's 483. That's the gross times 0.0145 or 1.45%. And that'll give us the 66. So this is just an example problem. Don't take those percentages as if they're always applying. Make sure to double check that and look at those. However, the point is that the Social Security and Medicare being flat rates typically are easy for us to calculate. The federal income tax being a progressive rate and relying then on tables exemption marital status is a bit more difficult for us to figure out. That's usually one that's being difficult. Then we have some other stuff we're not going to deal with now. This is just an example problem showing the federal, depending on the state we are in. We're going to have state income tax. That's going to vary from state to state. And we could have some other types of things that would have to be withheld. It might have union dues. We might have garnishments and stuff like that, which we would have to include in the withholding process. So this would be the minimum federal type of withholdings that we would have to be dealing with, and give us an example. Therefore, our net pay is this gross pay minus the FIT, federal income tax, minus the Social Security, minus the Medicare. But we're not done yet, because we also have to have our side of the Social Security and Medicare. So we're going to say our side is going to match the Social Security, in this case being this 258. And we're going to match the Medicare, which is going to be the 66. These are going to go in as positive. So this is what we are paying as the company, the owner, based on the salary to the employees. This is the same two amounts, but this is the amounts that the employees, these two are the amounts that the employees are paying for Social Security and Medicare out of their paycheck. So these are really not our payroll taxes. These are the employees' payroll taxes. These are the company payroll taxes that are paid based on the employees. We would typically have a federal income tax that would be mandatory too, but it's kind of dependent on the state unemployment tax. And so I'm not going to deal with the unemployment tax either in this example problem. And if you have this set up in the payroll system within QuickBooks and they're paying for it, then these taxes, the federal income taxes, would be calculated for you. But this will give us an idea. So we're going to say save and next. And then we're going to have our second employee here, Erica. We're going to do the same information, but now Erica is an hourly employee. So we have to put the rate in. We're paying $20 an hour, we're saying. And we're going to say that there were 40 hours worked. And therefore the calculation, the 20 times 40 is going to be that 800 that we're going to pay here. And then we're going to calculate the withholdings once again. Federal income tax withholdings, we're going to say is negative 110. That then getting the information, the exemptions, the marital status from the W-4, looking up on the table to find that information. The Social Security, we're going to say is 49, which, go back into Erica here, 49, and that should be calculated as the 800 times 0.062, typically. And so don't obviously it probably should be rounded up to 50, but we're going to keep that there. And then we've got the Medicare 11, and keep hitting return, and that's going to be usually 800 times 0.0145. So there's the 11, probably should be 12, but we're going to keep the example at the 11. And then we're going to have our portion, which would be the Social Security of 49 and 11. So same type of idea, the federal income tax typically being the most complicated. Again, if you're going to calculate these, make sure to seek a professional, make sure you're getting the current up-to-date dates based on the current up-to-date information, and you would need to include the state and local taxes and the federal unemployment. This is just going to be an example, get an idea of what this is going to be recorded and how it will then affect the financial statements. So this will be the net check then. That's what's going to be actually written for the net check. These amounts are going to be withheld. They're going to be payables on the books that we are then going to have to pay for the employee to the Fed in this case. And these two are going to be items that we did not withhold from the employee, but that we owe our payroll taxes that we're going to pay it'll be a liability as well, Social Security and Medicare, that we'll have to pay to the Fed. Now we're going to select Save and Close. We've entered that data, so now we have the data is there. So here's the gross pay, here's the taxes, here's the net pay, and then we've got in the employer taxes, our portion of the Social Security and Medicare. Here's the gross pay for Erica, the taxes, and then the net pay. This tax is including all the taxes that are employee taxes, federal income tax, their portion of Social Security and Medicare, and then our portion of Social Security and Medicare that we have to pay on the company side. Now we're going to go ahead and create the paychecks. So we will create the paychecks. We are not going to print the paychecks because they're already, we're not going to print them in this example. Note, however, that even if we were to write the paychecks by hand, we would need to provide in some format the pay stubs to employees. So you'd want to still print the pay stubs and provide those to the employees. Those are typically going to be mandatory to do. But I'm going to close this out and see what we have. So there are a couple areas where we can check and see what has happened in terms of the payroll. First, we can go to the register. That's probably the most common area to see if those checks were actually processed. Do they show up on the payroll register? We're going to do that. We're going to go to Banking, Use Register. And I'm going to keep it on the checking account and say OK. And then we see that these two checks are here for Adam and Erica. If we double click on the paycheck, then we will see the items within the paycheck and we can see the detail. If we want to see more detail, we can click the paycheck detail and we can see more of the detail here in terms of what has input. If we want to see what is going on in the financial statements, we'll take a look at that. Payroll, whether you do it within QuickBooks or you do it outside of QuickBooks, is one of the more complex journal entries that you'll have to put in place. If you do the journal entry within QuickBooks, if you run this process, QuickBooks does the journal entry, but then we need to really kind of understand what the journal entry is doing in order to make sure that we're paying the payroll properly. If you have the payroll system done outside by an outside like ADP or Paychecks, then you got to make sure somehow to get that information into the system with a journal entry or some format to get it into our books, even though it's been processed outside. And that might be a fairly complex journal entry to do too. So no matter what you do, whether you do it in-house within QuickBooks, whether you use a manual system, whether you use QuickBooks paid system or a third-party system, we have to have some idea of what the effect is on the financial statements in order to make sure, one, it's being recorded, and two, we understand how it's recorded, and three, making sure that we are in accordance with regulations to make the payments to the people that were withheld from the Fed, the state, and any other type of garnishments or whatnot. We got to pay for the withholdings. So we're going to go to Reports. We're going to go to Company and Financial, and let's take a look at the balance sheet. We're going to change the dates to 01/01/21. And let's go into the Customize field as well and change the range so that if we drill down on anything, we will see more than just the one date. So I'm going to go from 01/01/21 to 12/31/21. And that'll change this to 12/31/21. So now we have that range, and we can take a look at what's going to happen within the payroll. Now, when we process payroll, you would think that the transaction would be pretty easy if it wasn't for withholdings, meaning we would just credit the check and we would debit payroll expense. The withholdings complicates the picture because then the paycheck is going to be net of the withholdings, and the withholdings then will go into a liability. So first we can check the checking account as we did in the register, and we can double click on that, zooming in, drilling down on that. We see our two paychecks. If we double click on those, we see the paycheck once again. If we want to see the detail, we can click on that, see the detail. Closing that back out, closing that back out, we see those two there. If we go to the other side of it, we would assume that there would be an expense called wages expense or something like that. So we're going to go to Reports. We're going to go to Company and Financial, look at our income statement or profit and loss statement for QuickBooks, and we're going to change the date to 01/01/21 to 12/31/21. and look for our payroll expense. There is our payroll expense. If we double click on the payroll expense, we see it broken out in a lot of different items here. So note what they have here is we're going to have the check amount, and then they broke out basically the types of withholdings being the Social Security and the Medicare. And let me correct that. These two are not the withholdings of Social Security and the Medicare, but those are the employer portions of Social Security and Medicare. So what we have here are the total gross pay for the two employees, and then instead of breaking out our portion of the payroll taxes into a separate account called Payroll Taxes, they kept that in QuickBooks. Default is to keep that in the payroll expenses. So we're combining the payroll expense in terms of the employee gross pay and our portion of payroll taxes. Oftentimes at the end of when we create the financial statements, we may want to break out the payroll taxes to another expense. The payroll taxes in this case being the 258, the 66, the 49, the 11, the Social Security, and the Medicare for the employer side. If we were to double click on these, we can go to the check. There is the check item. If we want to see more detail, we can click here. Note that we're showing in the register this amount, the earnings, because that's what was in the payroll wage. That's what they earned in terms of an expense, even though they got a net check of this amount. So when we look at the expense side, we're recording the entire expense, not net of the withholding, meaning we recorded it gross on the expense side. If we want to see more detail, of course, we can go to the paycheck detail, and there is that. Closing this back out, if we choose one of these other items, this is going to be for the withholdings, our portion. We double click on that, and we get back to this paycheck. This emphasizing not the amount of payment here, the net check, or the gross check, but the amount of taxes lumped into this line here. If we go to the paycheck detail, what we're looking at is these items here. Social Security, I believe, is the one we clicked on. These two items being reported separately, those being not part of the employee wages, but part of our employer payroll taxes. So I'm going to close that back out. We're going to close that back out. And so those are going to be these items on the income statement or profit and loss. The next item to take a look at is going to be back on the balance sheet, and we should have a liability that we owe now for those withholdings we took out, as well as for the payroll taxes that are our responsibility for Social Security and Medicare. So there are other current liabilities. Here's the item here. If we double click on that, we see the breakout of the information once again for our employees, showing the detail of this information. And note we have the doubling up here. So this is the federal income tax for Adam. This is the Social Security employee portion. This is the Social Security employer portion. This is the Medicare employee portion, Medicare employer portion. Here's Erica's federal income tax withheld, Erica's Social Security employee portion, Social Security employer portion, Medicare employee portion, Medicare employer portion. So you can see how complicated this can start to get once we get more employees set up. We could set this all up if it was done basically externally with basically one journal entry showing this transaction, debiting the expense or increasing the expense, increasing the liability, and decreasing the cash. But if we want to show the detail per employee, then of course it's going to get a bit more complex to show that detail. If it was done by a third party, then they could show all that detail and within their system and provide that detail as well. So this is going to be some of the information. We double click on this, we get back to this check. If we double click on the detail there, we get back to that same detail. So that in essence is going to be the information. So if we were to lump basically the payroll recording into one journal entry, we would be decreasing the checking account for the net check that we wrote. We would be debiting the expense or increasing the payroll expense for the gross pay that is due to the employees, and we would debit it for either the payroll expense or payroll taxes for the payroll taxes, the employer portion of the payroll taxes, and then we would credit or increase the liability here for the amount that we withheld and are now paid or need to be paid to the organizations, in this case the Fed, for both the employee portion that we took from the employees in order to then pay the Fed with it for them, and our employer portion that we're responsible for as employers, our portion of Social Security and Medicare that would also have to be paid. Note that that can be done with one lump journal entry, but when we look at the detail, we need to track that per employee as well in order to track that data, so at the end of the time period we can process per individual what their W-2 was, what was withheld for them, and that whole process, what was the net check that was paid to them as well. So that's going to be the basis of the payroll. At some future time, we will of course have to pay this amount and to the Fed, and that would be writing a check to the Fed and reducing this liability.